It's as simple as that. So if you look at the pair, if you go to your MT4 and you download it and you go to the currency pairs, you see different currencies. Always remember that the one in front, which is the base currency, is higher than what? The one behind, which is a quote currency. That's basically what it means. There's no big. Now look at it. Currency pairs are divided into major, crosses, and exotic. When you see major currency, any major currency is a currency that has USD on it. Because US dollars is the highest, is a country that have the highest volume. If you go to anywhere, if you decide to travel to Dubai now, you're going to change. My internet is unstable. Can you hear me? I think I need to change my internet. Hold on. Okay, Femi, please, can you record this call? Someone wants to record it. Please, can you record it? Now, when you hear major currencies are any pair that have the US dollars in it. Like I was saying, if you're traveling to any country, if you're going to Dubai, the first thing you do, you change your Naira to what? Dollars first. Then when you get there, you change the dollars to the currency that they are used in what? In Dubai. Yeah, I can hear you well. Okay, good. So that's what we say major currency, because USD is the dominant currency in the whole world. They have the like if you want to, if you say, well, who is the greatest country in the whole world? You know, America is actually the greatest one. So that's why they have the, when they say the major pairs, USD is in virtual anywhere you see USD in any pair that comes together, those are the major pairs. Then crosses are the one that doesn't have the USD in it. Then exotic pairs are those countries that actually do not include US dollars in currency pair, and they ideally have the diversification. Crosses including JPY, Euro GBP, Canadian JPY, Australian dollars, and Canadian. See all those pairs, they don't have US dollars in USD in it. That makes them crosses. If we continue, if you go to the exotic pair, it will tell you about those ones that low amounts of volatility there. That tells you what it means. Now look at the volume traded every day. If you see Euro USD have the highest volume allocation there. So many people are actually trading this currency because the activity, the government is working fine. There's so many things happening. See others, this is GBP USD, this USD JPY. Then every other pair, you can see little, you can see on the charts, they have little activities going on in that, with that pair, because most people don't actually trade it because they don't have high volume coming from that part. But the major pair most traders actually trade because of the high liquidity is this one, the Euro USD, GBP USD, and USD JPY. This data was actually given by Bank of what? Europe. So if you want to know more about it, you can go to Google and you see. Now these are exotic pairs. Exotic includes currency from developing countries. This makes them very liquid. They have very high spread because activities don't go on there much. Their spread are very high, like Hong Kong, Singapore dollar, South African rand, Mexican pesos, and all that. Their spread are very, very high because there's no much activities going on. There are many traders who successfully trade other pairs too, but the general rule of thumb for beginners is to start off including the most common currency pair. So you, for a beginner, if you want to trade, forget about anything exotic or crosses. Just go for the major ones that have high. Because of that, the government is actually working. There are so many things happening around it. So that's for new beginners. Then when you are now getting better, you can understand how to trade with exotic. I don't even trade exotic. I go for just the one that have the USD pairs. Now let's understand the base currency and the quote currency. You can see here the Euro flag and the USD flag. The base currency, like I told you earlier, the one in front is what? The one by your left-hand side, which is the base, is greater than what? The one on your right hand side, which is the USD. You can see it based on the quote. If you read a little right up here, it can be a little tricky at first to understand currency pair quote, but it's pretty simple. Simple thing once you comprehend it. In an example above, hold on, I need to shift this. The Euro USD quote of 1.13327 shows how much €1 is worth in USD. This means that €1 is worth this 1.13327 US dollar. It's just telling you that 1.13327 is what this euro is what that in dollars. That's just the price for euro in $1. Okay, it tells you that euro is greater than my voice is cracking. Can you people hear me well? Please somebody say my voice is cracking. I think my hold on, let me change my internet. Maybe that will help. Just give me 1 minute. I'll change my internet. I think that will help. One minute, sorry about that. This is the country we live in. Just give me 1 minute. Okay. Okay, can you hear me loud and clear now? If you can hear me, please can you type yes on the chat box? Okay, good, thank you. All right, let's go on. Femi, can you remove the one people writing on my screen, please? Are you still on the call? Someone is writing on my screen, please. Can you disable that? Okay, so now let's go.
Sorry, Madam Peace, you have to disable participants annotation from your own end since you are the one sharing the screen.
Oh, how do I do that?
Okay, let me send a request to control your screen, then I'll quickly set that.
All right, please do that.
Okay, give me access. Permit me to control your screen. Accept my request.
Okay.
Okay.
All right, please, can you take over that stuff? Now, good. Sorry about that, please. So if you go to the bank, you will see things like this on the wall. Selling price and buying price. You can see that when you go to the bank, you see all those. Yeah, Femi, have you done that, please?
Just a minute.
Okay. So it's telling you these are the bid and the ask price, meaning if you want to buy, if you go to the bank now and say you want to buy dollars, they tell you the amount of dollars that they're selling it. For instance, they're selling it at 350, but if you want to sell yours, they'll tell you, okay, they're going to buy it at what? At a lower price for you. That's just what this thing is. Now, that physical thing that we're doing, or you go to your Bureau de Change to do that, you can as well do that online. So that's the spread that they're just telling you 3 minus 2 gives you 1 pip. So it's just a different thing. That 1 pip you're seeing there could mean $1. It could mean 1 cent. It could mean $100, depending on the lot size that you're using. If you remember, we're still going to go to lot size. You understand what I mean? So that difference is what you're going to get as what profit or as loss if you're actually trading in the forex market. That's simply what the spread means. The spread is just the difference from selling one currency and buying the other currency. Okay, that's what it means. So it's not, by the time we are going further, you understand how it works. The difference between the sell quote and the buy quote in pips. The higher the liquidity of a currency, the lower the spread. So let me explain that. The higher the liquidity is, the more people are actually trading that currency pair, it have what? Lower spread. Like I said earlier, Euro USD is majorly the pair that most traders trade, because the government, these two governments always have activities, financial transaction activities happening every time around them. So these are the major pairs that people actually trade. So the major pair that people trade in the market have very little spread. Why the one that people don't trade often, just like the developing countries I showed you earlier, which are those exotic pair, people rarely trade them. So their spread are so high for the broker to actually make money for themselves in that place. Now I want you to understand what leverage is. I know he explained leverage yesterday, but I want you to understand how it works. For instance, you go to the bank to get a loan of $5,000. And the bank tells you, okay, I'm not going to give you $5,000. And the project you want to do is actually a project of $10,000. But you've asked the bank to give you $5,000. And the bank said, okay, what I'm going to do is I will allow you to have access to a loan facility of $10,000, but what you can withdraw as cash is what? $5,000. That's what leverage means. Your broker gives you leverage that if you have $200 in your account, depending on if you opened your Handtech account, you see where they wrote leverage 1 to 10, 1 to 500, 1 to 1,000, 1 to 200. That is the leverage that you have when you are trading. It depends on how much you have in your account. So if you have $200 in your account, if you are doing a leverage of 1 to 200, your broker is giving you access to $2,000, so you can have multiple entries on your account and trade and get more money. But I always tell people, for a beginner, it's better you reduce your leverage, because if you have multiple trades open on your platform and they are not going in your favor, you can lose all the money you have in your account. So the lesser your leverage, the better for you, for those who are actually learning, for beginners. Until you've gotten to the place that you have confidence in your trading and all that, you can increase your leverage. So if you have your leverage of 1,000, of 1:1,000, if you have $1,000, you can actually have access to $20,000 from your broker. That is just a leverage. So you can open more multiple trades and make more money. But for now, if you take my advice, if you go to the leverage side, instead of picking 1:200 or 1:500, go for the lowest one, 1:100. So it can help you with risk management when you're trading. As we are going, you understand what I mean by this. Leverage allows you to invest a small amount of money while trading a larger position through the loan from your broker. Leverage is presented in a form of multiplier that shows how much larger the open position is against the margin. This actually an investment amount when it is open. So if you understand what I mean by you going to the bank to loan money, and the bank tells you, okay, I'm going to give you a loan facility of $10,000, but only what you can withdraw to do whatever you want to do is $5,000. If you want more, we will see what you've actually done, then we can tell you to come and access it. It's just, that's what leverage is. So forget the big English. I want you to understand what it actually means. Okay. Now this is just a picture illustration of it. So I'm sure this person explained, Blaze explained this yesterday. If you had money in your account, $100,000, and you go for this is only what you can actually get, $78. But with leverage, if you have a bigger leverage, instead of getting $78 and $100,000, you're going to get more, like $78,000, because of the kind of leverage you're using and the number of lot size that you're actually using to trade in the Forex market. Okay, now this is return on investment. It's a continuation of the leverage. Various brokers offer different type of leverage, ranging from 1:50, 1:4,000. You can imagine when I told you to 1:4,000. Those big people that have large money, like $1 million in their trading account or $500,000, they go for higher leverage because of the lot size they use. But for you beginners, you can start with the very lowest one. I advise 1:100 is better for you, which means you can increase the potential earning of profit between 50 to 4,000 times faster. But note that the potential loss is also increased by your leverage. So remember that the more leverage you have, if you are thinking of the profit, always remember what the loss is too. Because if the trade is going against you, you're going to lose your money faster than someone who actually have a lower leverage. Now, for example, 1:200 means $1 in your account, your broker allows you to access up to $200. And this is vice versa for every other leverage offered by your broker. Leverage gives you better return on investment, but can really hurt just as bad without proper money management. If you remember what I said earlier, if you don't have good risk management, this is not where you belong, okay? It's not where you belong. You need to have good risk management. From our former illustration, if you deposit $100,000 of your own money and make 7 pips, your return on investment, RIO means return on investment, would be 0.07%. While if you deposit $1,000 of your own money and make 7 pips, using 1:100 leverage, which allows you trade up to $100,000, your return on investment is now what? 7%. So without leverage, you make small money in the forex market if you're trading on your MT4. But with leverage, it gives you access to make more money. And it also gives you access to lose more money if you don't understand how to trade in the forex market. So that's the importance of leverage that the broker gives every of their customers. Now, these are the lot sizes. We have 4 types of lot size: the standard lot, the mini lot, the micro lot, and the nano lot. Now, this is it. This is where everybody says Forex is a scam, Forex is a this, you are losing money in Forex market. Now, let me tell you, the only business that you can determine how much you're going to lose is in the Forex market. Every Forex trader knows how much they are going to lose. But most people lose so much because, one, they don't use stop losses, they don't have good risk management, and the lot sizes that they are using for their account is just like you carrying a rock or putting 2 sticks and putting a rock on top of the 2 sticks. What's going to happen? Even if the 2 sticks can hold the rock for like 5 minutes, it will get to the time that rock is going to crush crush those sticks. That's the same thing that happens in your account. You have $100 account and you are using a bigger lot size. Now, let me explain what it is. 100,000 units is what? 1 standard lot. Meaning, if you have if you're placing 1 standard lot on an account, what you're going to get is $10 per pip. So let me give you an example. Pip means a movement, like what Blaze told us yesterday. Pip means a movement in the forex market. So if you have $100 account, for instance, and let me don't use $100 because it's going to wipe off. If you have a $500 account, for instance, and you use 1 standard lot, and you are looking for 10 movements from the market in your favor. 10 movement, I'm using 10 movement, 10 steps, 10 pips. Let me use the word steps so you can understand. 10 pips, I'll use 10 times 10, which is $100. But let's assume the trade goes against you backwards. It's not going in your favor and it goes 50 steps backward. Meaning that $500 account you have will be wiped off. You will lose those $500 accounts if you don't have what? Good risk management. 1 standard lot means $10 per step. So 10 times 5 will give you 50. You've lost $50. So imagine it moves 50 steps backward and you're using 1 standard lot for 1 trade. So if the market just moves 50 steps backward, the $500 in your account is wiped off already. But imagine that you're using 0.01 on a $500 account. It's going to take the market to move 5,000 times backward against you for your account to do what? To wipe up the $500 account. So if I ask you a question, which will you prefer? Is it for you to use a higher lot size and enter the market with a very small account, or go with the lowest one and open different positions in case one is not going your way, another one will go your way? Now, what people want to do, they want to get rich quick scheme. That's why they go for the higher lot size so they can make more money and do what? Leave the market. But sometimes it might not be in your favor. So it's better that you use the lot size that's actually good. Okay, you go with the lot. Good. You go with the lowest lot size. That's good. Now I want you to look at what you have on your screen here. The currency pairs, the standard lot, the mini lot, and the what? Micro lot. So for instance, you have $100,000 and you decide to go for 1 standard. This is what you're going to get. Have you seen what's on the screen? 100 for 1 standard lot, what you're going to get for 1 move in the market is $9. For a mini lot, you're going to get $90. For a micro lot, you're going to get 0.09 cents. It's better to gradually grow your account than to grow your account fast. And when the market goes against you, you lose everything. There was a time I was teaching like 2 years back. I called a trading class. This woman had $200 in her account. That one she did not know. It was a mistake, but the mistake favored her. She used a standard lot, and the trade went immediately in our favor, and that we're going like 20 pips. That's 20 steps in our favor. And it went in our favor that day. Unfortunately for her, people were like, oh, thank God I made $2. Somebody said I made $20. The other person said I made these dollars. And the woman said I made $200. Everybody was shocked. I was like, how come did you make, what lot size did you use? And this woman had just $200 account. She made 100% of her account that particular day. But guess what? That was a blessing in error. Because that woman made $400 account. She thought that was how easy it is to use a bigger lot size on a small account without good risk management. And she went back home to try the same thing. She lost the whole $400 in the Forex market because she was thinking that that's how sweet Forex is. No. Risk management is number one thing in the Forex market. You must know how much you want to lose before what you want to gain. So if you don't have a good risk management, you will keep losing your money over again in the market. You can see everything here on the screen. The currency pairs with the different amount. Every currency have different spread and different amount they're going to give to you. Like you can see Euro USD. Let's look for Euro USD. I don't know if it's okay. Euro USD. You can see just one standard will give you $10. The other one will give you $1. The mini lot and the micro lot will give you 10 cents. But some of other pairs have different money because of their spread. You can see them on the screen. Their spread are actually high. But this is what you're going to get if you're using it. Now, if you look at this picture on my screen, it tells you the lot size you're going to use depending on the account that you have. If you look at this thing, you can actually lose this money you're seeing here if it goes against you one step. You can actually gain if it goes against you one step. So if it goes against you 10 steps times what you see here by 10, that's what you're going to lose on any account you're going. If you're going for one standard lot size, or you're going for 0.1, the mini lot, or you're going for the micro lot. That's the first thing you should think about before you enter any trade in the Forex market. Okay, this is just to understand the lot sizes that we're using. Now let me explain to you how it works here. As you may already know, the change in the currency value is relative to another, measured in pips, which is very, very small percentage of a unit of currency value. To take advantage of the minute change in value, you need to trade large amounts of a particular currency in order to see any significant profit or loss. Different brokers have different methods for calculating pips value relative to lot size, but whatever way they do it, they'll be able to tell you what the pip value is for the currency you are trading at the particular time. In other words, they will do all the match calculation for you. As the markets move, so will the pip value depending on what your currency you are currently trading. Now, if you look at it, every broker, there are different brokers, just like Handtech, FXTM, IC Markets. Different brokers have different spread for different what? For different currency pairs. But that doesn't, I tell people, focus on the broker that you know that you can always contact anytime you have an issue. Like why I recommend Handtech is because one, they are in Nigeria. So it's easy for you to walk up to their office and say, okay, this is what I want, this is my complaint and all that. Okay. So it's better you work with people you know that they are actually here, and you can do with anything you want to do. You can work with IC Market. I have my own account with IC Market, but I use more of Handtech because of they are here, and these are the people when I need any customer relation work, they can attend to me in a snap of my fingers. So if you can look at the screen, that what explains the lot sizes that we have and how much you can gain if you use it and how much you can lose if you actually use such. Now, this is what I mean by the lot sizes in picture form. One standard gives you this unit of currency, mini lot gives you this, micro lot gives you this, and what? The nano lot gives you this. You know, some people ask, someone sent me a message on Twitter that I have $10. Can I trade with it? The question I told him, Forget about the $10 you have in your account. Before you want to trade in the forex market, you must surely have money. If you don't have money, at least understand what you're doing. Yes, I took a $7 account to $600 in 4 days. That's because I have the skill. That doesn't mean you can do the same thing. It took me 3 years to be able to do that. So you cannot just come after going to Google or after watching this class for 3 days and you say you want to trade. No, you're going to lose that money in the forex market because you don't understand. If you go for the money first, you will lose the money that you're putting in the forex market. Go for the skill first. Understand the movement. This forex is very simple. The only thing is for you to know when one currency is weak, for you to buy it, and when one currency is strong, for you to sell it. That's just the difference. But you have to understand the technicalities before you go into the forex market. You don't just jump on it because you're seeing people actually doing it. Now, this is the type of orders we have in the forex market. Now, instant execution means, let me break it down to our language so you can understand it. Buy limit order, sell limit order, buy stop, and sell stop. These are all orders, but one is immediate and the other one is what? Has a price. If I call a trade now and I tell everybody, click on instant execution and enter the trade, we're all going to have different prices. We're going to buy each currency, and the currency I'm going to call, we're going to buy it at different prices because of fast finger. Somebody might be faster than the other. Like the trade I called buy gold on Friday. Some people saw it late. Some people entered it immediately. I called it on Twitter. Some people's price will be different from the other people who saw it late because it was what? An instant execution. It simply means if you go to ShopRite now, let me say you go to ShopRite to buy a pen. You know, there's a price there that the pen is 5 naira. You cannot tell them, Madam, I beg, reduce the price of this thing. No, there's a price tag on it already. So that price tag tells you, this is what I want to buy at this particular pen. And if you go to the counter, you pay for it and you get a pen and you're going to pay that 5 naira. I'm giving an example. But if you go to Akbombo market or Alaba market and you want to buy that same pen and you see it for 5 naira, you can bargain with the seller because there's no price on it. You can say, oh God, can I pay 4 naira 50 kobo? And the person will say, okay, yes, bring your money. That's what instant execution is. Some people might enter faster. The prices are different. But if I call a buy limit, it's for you to set it. Everybody, as soon as price activates that buy limit or sell limit or stop or sell stop, everybody will enter the market at the same time. As we go on, I'm going to explain. This is the mobile phone, the way it is on your mobile phone. When you download MetaTrader 4 on your mobile phone, this is how the view is. If you click this an Android, this is actually an Android screenshot. If you have an Android phone, when you download your MetaTrader 4, this is what you're going to see: instant execution, buy limit, sell limit orders, and other orders like that. Now, this is the explanation of it. Orders refers to how traders will enter or exit a trade. There are different types of order that can be placed in the forex market. You have to know which type of orders your broker accepts. Different brokers accept different type of forex orders. The most common orders types are the instant execution, the market execution, stop entry order, limit entry order. That's the buy limit or sell limit. I'm going to explain how all this thing works. It's very easy. A market order is an order to buy or sell at the best price available. Now, if I tell you that euro is going to fall by $1, place your price at $2. As soon as the euro gets to $2, buy it at that particular time. Everybody will buy at $2. But if I tell you at this particular time by 2 o'clock, buy euro USD. Now I'm giving you a time. Some people might miss that time and buy it maybe at 2:30. You buy it at a different price. I'm just trying to break it down in a layman understanding so you understand the difference between an instant execution and a buy limit. For example, the bid price of euro USD currently is 1.13110 and the ask price is 1.13112. If you wanted to buy euro USD at market price, then it will be sold to you at this exact price that the market is. That's 1.13112. This is the price where the market is at the particular time you want to buy it. Your trading platform will instantly execute a buy order at the exact price you click. It's going to be like, I'm going to show you a live trade so you can understand what I mean. It's like going to ShopRite to buy a commodity at the exact price written on the pack without negotiating. This is when you are doing a limit order because the prices are already there. Keep that in mind on market condition. There may be difference between the prices you selected and final price that is executed on your trading platform. So the difference between instant execution and every other price order here is instant execution. If everybody on this call, if I call a trade and everybody enters, we're going to enter at different prices. But if I call a trade and give you a buy limit order, sell limit order, buy stop order, or sell stop order, as soon as the price triggers, it's going to trigger everybody at the same price we're buying any currency at that particular moment. That's just the difference between that order and this order. Now, look at the screen very well. This is a buy stop and this is a sell stop. A buy stop means I'm expecting price to increase. I'm expecting the value of a currency to increase. Maybe from, let me use a scale of 1 to 10. Yeah, scale of 1 to 10 is beautiful. Price is exactly at 1. And from my analysis, I saw that price is going to go to what? 10. But because I'm not very certain, because the prices are moving, you know, in Forex trading, it doesn't move in a one-way traffic. No, sometimes it consolidates, it shakes before it starts moving. So what I would do, buy stop is, I'm going to place my buy order on number 3. I'm expecting price to dance around 1, 2, 2.5, and all that. As soon as it gets to 3, it activates my order and start moving to 10. That's what buy stop order means. But if price gets to number 2 and begin to return back to 1, to -0, -9, and start going back, my trade will not be active because it has not activated me. Buy stop is placing your entry or your entry price above the current market price. So if the current market price is 1, I'm placing my entry to be activated at 3. So by the time price leaves 1, 2, and hits 3, it will activate my order until it gets to my take profit where I want to leave, maybe at 9 or 10. That's what buy stop means. Then sell stop is the opposite of it. You know, you buy low and you what? You sell high. Like a farmer goes to the market to buy oranges. He buys the orange, or a seller goes, a trader goes to the market to the farm to buy oranges. He buys from the farmer at 2 naira. You don't expect the seller to go to the market and sell that same orange at 2 naira. The seller is going to add, the trader is going to add her own profit or his own profit to the orange and sell it to what? The people, the end user that is going to buy it. So that's just the same. When I say buy low, she bought the orange at 2 naira and she's selling the orange at 5 naira. So the 3 naira is the profit that she has made what? From that orange that she bought from the farmer. So it's the same thing with selling. If you notice, when there's a fuel scarcity in Nigeria, before you hear that there's a fuel scarcity, those some hoodlums will go to the filling station and bring their gallons to buy fuel and fill up their gallons. Then by the time the filling station stops selling, they start selling to you at their own price. So the filling station sells at 150. The man, when there's no fuel, you come to buy from him because you need fuel to put in your car and all that, and he sells to you at what? 200. Because he has heard that there's going to be a fuel scarcity and the price is high, he started selling it, and what? He's making more money from it. Now let me come down to using currency when I say you buy low and you sell high. Remember before dollars grew from 360 to 450. When it was at 360, my Bureau de change guy, the Aboki that normally sell dollars to me, called me and said, madam, price is going to increase very soon. Oh. Can you buy more dollars and keep? So by the time it increases, you can sell it. So then when price was about when it grew to 375, 380, I bought some dollars and kept in the bank. So by the time it increased, when I called him, the last time I spoke with him, he said dollars then was about 420. I had some dollars in my account. I withdrew it and I did what? And I sold it. I made money. That's the difference. So when I say you buy low You buy a currency low and you sell it when the currency is high. That is what those bureau de change guys are doing on the street, and they're making money. So that's what you are going to do with your laptop and with your system. Now, sell stop is the price is going to reduce. Like now, the price of Naira is actually 450 to $1. So for instance, you have your ears are on your ears are very wide. You hear that there's a rumor that, oh, Nigeria is getting better. We're going to get better. We're going to fix our government. Our Naira is going to come down. It's not going to be going high. It's going to drop very well back to 300. What are you going to do? Those money you have stuck in your account, you start selling it off. Because if you still have 400, if you bought dollars then at 450 and you kept it and it drops to 300, if you sell it, you're not making any money. You've actually lost money. So that's what it means that you're selling high and you're buying low. Now, this on the system, what it means that if price gets to 10 and you know that price is going to reduce from 10 to 1, what you are going to do is place an order maybe at 7, expecting price to come to 7, activate you and keep going down. But if price comes to 8 and decide to increase and start going back up to 11, 12, you've not made any loss, you've not made any profit because your trade was not activated. But as soon as your trade is activated and comes down in your favor to 1, you make money. But if the trade activates and returns back, you're going to lose money. But thank God for what? Stop loss. Stop loss helps you to reduce, helps the trade not to do what? Hit into your capital very well. I'm sure it's going to, yeah, it's good. Now, this is the illustration of it. The illustration of it in letters. A stop entry order, buy stop or sell stop, is an order placed to buy above the market or sell below the market at a certain price. Sorry, my chat is blinking. I need to know who and who. I said earlier. Oh, okay. Stop order is like a race. Once you cross the starting line, you entered into the race. For example, pounds against USD is currently trading at 1.2917 and is heading upwards. What I mean is heading upwards, this figure you're seeing here will keep increasing from 1.297 to 1.3 to 1.4 and all that. That is the anticipation that this low price is going to increase. You believe that price will continue in this direction if it hits to 1.129. You have 2 options here. Set in front of your computer and buy at the market when it's at 1.2950, or set a stop entry in order at 1.2950. That's exactly what I mean. Let's make this green line, the running price is 1.129, 1.12917. And this red dot on this bar here is where you place your order at 1.12950. So what you're expecting is price to come all the way up, keep increasing, hit you here, activate your price, and keep going up. And the more it keeps going up, you're making more money. You understand? If it keeps going up, you're making money. But if price activates you and come down here, you know that you're going to lose that money. Because what you did is you're expecting price to keep growing to activate you and for it to increase so you can make more money. So what I'm telling you, get the skill first before you enter any trade. Before I can confidently call out trade and say, I believe this trade is going to this direction based on technical analysis, is because I've studied the market and I know that this is what's going to happen in the market. So by the time we go from beginners class to intermediate class, you understand better how to read the market. Now, this is the limit order. Limit order, you're expecting price to do what? Let me give you an example now. You are going to Maryland, for those who live in Lagos, and you followed one way, and you saw that there's a policeman in front that is going to arrest you because you are following one way. What you're going to do is reverse back and follow the right way and join what? The traffic. Now, this is you here coming, expecting price to hit you here. A buy limit order is you are placing price below the market, below the current market price. For example, the current market price is at 3. You're expecting that price is still going to come down to 1, activate your account, activate your trade and start going back up. So what you're going to do is, if you see that price is just like a boomerang, you throw the boomerang and the boomerang comes back to you. So you've seen that price has actually passed the place that you want to, but you place a buy limit order below the current market price, expecting price to come down, activate your account, and keep going back up. That's what the buy limit is. The sell limit is, I'm expecting price to go further up, activate my account, and start coming what? Down. Because I remember I told you, you sell high and you buy what? Low. It's just the opposite of the same thing. Now, this is the illustration so you can understand better. A limit entry is an order placed to either buy below the market or sell above the market at a certain price. Now, let me use the fuel scarcity as the same thing. You've heard that there's a fuel scarcity and you've bought fuel, and maybe your colleague, you bought with another of your friend, and your friend is telling you, fuel is 150, I'm selling my own at 200. You better start selling before it reduces. But because you know that the fuel is going to go more than 200, you keep your fuel and expect it for the price to increase to at least 250 naira. So you can now start selling to people that come to buy from you. So what you're expecting that the sell limit is, you're expecting price to increase more, activate you, then you start selling from there. That's just the difference. Or you actually wait for those like now, iPhone 11 Plus, I'm sure that's the latest iPhone now, came out, and you're like, I don't have money to buy this. So people like, don't worry, the price will still come down. Another iPhone will come out. I will buy it. So that is a buy limit order. Instead of me buying it when it came out at 500,000, I'm going to wait for it to reduce to about 350,000. It's still the same iPhone. You understand? So by the time it reduces, I will buy it at 350. I've saved myself 150,000 naira in my pocket. That's the meaning of buy limit order, and that's just the meaning of sell limit order. You wait for price to reduce more so you can buy it, then continue buying from there. Limit order are like boomerangs, which means price has to go to one way before it goes the other way. Down before up, or up before down. For example, Euro USD is currently trading at 1.2050. You want to go short if the price reaches 1.2070. Do you understand what it means? You want the price to, you sell it when the price has come up to 1.2070. At that time, the price is at 1.2050, but you're not going to sell. You wait for it to increase more to 1.270, then you can place a sell order. That's what the sell limit order is. You can either sit in front of your monitor and wait for it to hit it at the point which you would click a sell market order, or you set a sell limit order. Is a order of buy. If price goes up to 1027, your trading platform will automatically execute a sell order at the best available price. You use this type of trigger when you believe price will reverse upon hitting the price specified. A limit order to buy at a low price below the current market price will be executed at the price equal or less than the specified price. It's just what I explained. If you're expecting price is at 3 and you're expecting it to reduce more at 1 before you buy, you just place your limit order. As soon as price come back to 1, it will activate you and start going back up. So by the time it gets to 3, you've made money from 1, from 2, made money to 3 before price gets to 4, 5, and hit you at 10, where you want to exit from the market. A limit order to sell is a limit order to sell at a price above the current market price will be executed at a price equal or more than the specific price. This is just English language. I want you to understand what that means. Now, this is stop loss and take profit. Stop loss helps you. For instance, you have $500 in your account. What stop loss does is, if the price is going against you, maybe you've done your analysis and you took a trade, expecting that price will go your way, but unfortunately, it did not go your way. Instead of going in favor of you, it started going against you. The work of stop loss is for it to, anytime price hits your stop loss, you've already calculated that, okay, out of $500, I want to risk $30 on this particular trade that I'm taking. So as soon as you place a price, that when the price comes to hit it there, only $30 will leave my account. So what I'll be left will be $470. If you ever forget to put take profit, don't forget to put your stop loss. And never trade without a stop loss. A stop loss will help you to control what? Your losses. If you don't have a stop loss, price can keep going against you until your broker margin calls all the trades on your account. So never trade without a stop loss. Anybody that tells you I lose money in the forex market, I've been losing money in, one, that person don't have the skill. Two, that person don't trade without a stop loss. This business is the only business that you can determine how much you want to lose in the forex market. For instance, if you are an importer, you import cars to the country and you put your cars in the sea, expecting them to come to Nigeria. Something happened and the ship there's a problem and it sinks in the sea. You can't do anything except you have an insurance. But Forex here, you can determine how much you want to lose. Out of your $1,000 or $500, if you set your stop loss that I'm going to lose $10, even the devil can make you lose more than $10 in that account, in that trade. So the sound is so bad. Can you hear me? Please, if you can hear me, can you type yes? Some people say they can't hear me. Can you hear me? Okay, good. So I'm going to explain, thank you, what the stop loss order is. Now, a stop loss is your account safety net. You can see this man, maybe he was falling down. This is an engineer. If you can see the cap on his head, he's falling down from a building. This net helps him not to crash, because if he crashes, he's going to die. So this net here is your stop loss. If you don't have it, your account is going to go. So all those people that tell you I've blown my account, they don't have a net, a safety net where price will hit and secure some money for them. A stop loss order is a type of order linked to a trade for the purpose of preventing additional losses if the price goes against you. If you're in a long position means buy. It is a sell stop order, meaning if you are buying, if you decide to buy more euro, but unfortunately, the price, instead of the euro to be increasing, the euro is reducing in value. Your stop loss will help you do what? Maybe if you say, I'm putting $20, I'm going to lose $20. As soon as it comes to $20, it automatically closes that trade for you, and you lose only $20 from that trade. And the other capital is still good and fine for you. But if you don't have a stop loss order, if the euro value keep depreciating, it will depreciate until everything in your account is gone. If you are in a short position means sell. It is a buy stop order, meaning if you are selling, you're expecting a price to do what? Add more value or to depreciate, but yet the currency is still going up. Just like some people are thinking that Naira is still going to come down to 200 and all that. As you can see that every day by day is growing. So for instance, you are trading Naira on the platform. Naira is not on a trading platform. I'm just giving an example. Maybe you placed a sell order expecting it to keep coming down, let the value keep going down, but the value is going up and up and up from 360 to 370 to 400 to 450 to 480. Right in front of you, you are seeing your money. You're losing money in front of you on your laptop, on your mobile phone. But if you set your stop loss, that maybe when I sold this thing at 350, I'm expecting price to come down to 300, but the price keep going up. You set it that as soon as price gets to 370 Naira against $1, please close me out on this account. If there's no stop loss there, it will keep going up until it gets to the peak where your account is gone. So that's important of what? Stop loss. Don't ever forget this type of order. A stop loss order remains in effect until the position is liquidated or you cancel the stop loss order. You can choose to terminate it yourself, or you allow the system to do it by itself. So please never forget to put a stop loss order. For example, you went long. Long means buy. Euro USD at 1.2230. To limit your maximum loss, you set a stop loss order at 1.220. So what I'm expecting to lose is just 3 pips, okay? Just 3 pips here. That's what I'm expecting to lose. sorry, 30 pips. So if I'm going using one standard lot on a $100,000 account, I'm expected to lose just $3,000 on my $100,000. That's for those who have $100,000. But if you have $100 and you put one standard, it shouldn't even go, because one standard is $10 per pip, and 10 times 10 is what? 100. So if you are putting one standard on that, as soon as the market goes 10 pips, your $100 is gone against you. So you understand the importance of lot size you are using. The lot size you use is what the meaning of lot size is. You have to use the lot size that is equivalent to the account, so equity, what you have in equity. Not because I'm using a standard lot, you don't know how much I have, so it's better you use, if you're having small money, go for the smallest lot, the micro lot. So this means if you are wrong and Euro USD drops to 1.2200, instead of moving up, your trading platform would automatically close out and your position will lose 30 pips. So you're going to lose just 30 pips. So if you're using 0.01, what you're going to lose is $3. If you're using 0.10, what you're going to lose is what? $30. If you're using one standard, what you're going to lose is $3,000. So I need you to have that in your mind. $3,000, $30, $3. Which among this, if you lose, will not affect your equity? So that's the kind of lot size you're going to use when you're trading in the market. Stop losses are extremely useful if you don't want to sit in front of your system or hold your phone all day worried that you will lose your money. Some people, you see them trading, they are holding their phone, walking on the street because they are monitoring trade. No. As an expert trader, you place your trade, you put your stop loss, two things will happen. You come back, it's either you're making money or what? You've lost that money. Please, I can't see your screen. Your screen is blank. Please, can you see my screen? Someone say they can't see my screen. If you can see my screen, please type 1. I need to know everyone is on the same page. Okay, good. Maybe it's your network. You need to check your network, okay? So that's the important of a stop loss order. For a buy position, you're expecting price to go up. So the stop loss will be above the price at which entered for a buy. For a sell position, your stop loss is expecting to go down. Let me use the example. Let me use this. Oh, just 1 minute. I want to use the previous picture to explain to you what that means. Now look at this illustration, this picture here. If I'm buying, let me say I place a buy on this red button. My stop loss is going to be below the red button. So instead of price to activate me and go up, but price decides to come down, it will hit my stop loss. I will lose maybe just 10 pips, 30 pips. That's about $3, $30, or $3,000, depending on the lot size I'm using. If I'm selling, my stop loss will be above my entry price. Meaning if price decides, instead of price to come down in my favor, it decides to go up, keep going up, keep increasing in value. If it hits me at my stop loss, I will lose that particular trade. But if I don't have stop loss and it keeps increasing and increasing, I will keep losing my equity in the market. So if you are buying, your stop loss should be above your entry price. So if your entry price is at 5, your stop loss should be at 3, anything below 5. If you are selling, if your entry price is at 5, your stop loss should be anything above 5. That's what it means by stop loss order and buy order. What that illustration, the last explanation means. Okay, I just needed to go back so you can understand how that works. I'm sure everyone is following me. If you are following me, please type 2 on the chat. Let me know that I'm not just talking to myself. If you are following me, can you type 2 on the chat box? Okay, good. Thank you. Now, this is a market analysis. There are 3 things before traders look at before they enter the market. Market analysis and type of market analysis. Technical analysis, fundamental analysis, and sentimental. Now, before we go to technical analysis, like about 200 or 100 years ago, the only thing that traders trade in the market is fundamental. And fundamentals are breaking news. For instance, the last time Donald Trump said he had COVID-19, the value of dollars dropped. What traders did, they started selling their what? Their dollars. Selling off their dollars because Donald Trump tweeted that himself and his wife was infected by COVID. God forbid. Okay, let me give another example. 9/11, that happened. So many traders made serious money from that hazard that happened on 9/11. There was a disaster in America, but forex traders were making money. Ask me how they were making money. Investors saw that the main heart of America was destroyed. What will happen to my fund? If you are trading Euro USD, any smart trader will sell off their what? Dollars and be buying more euro. So if I go on my MT4, let me show you MT4 so you can understand. I want to show you my MT4. I want you to pop up if you can see it. Then I'll tell you what I mean. It's coming up as soon as it comes up. So that news, okay, now look at it. If you can see my MT4, if you can see my MT4, can you type 3? If you can see my MT4, can you type 3? Okay, now this is a very beautiful illustration. Good, good, good. Now you can see that I placed a sell on this account. This is a demonstration account. I placed a sell here. I want you to see something. Look, look, this is a beautiful. Now see how much I'm losing here. 3,930. I was expecting price to reduce in value, but price was increasing in value. So the more this price keep going up, because there's no stop loss, this is a perfect example to show you the importance of stop loss. If I had placed my stop loss somewhere around here, let me use this red line because I'm selling. If I had placed my stop loss somewhere around here, as soon as price got to this place, it will automatically close this trade. But because there's no stop loss, there's nothing that price saw if you keep going up. I know I called a buy on Twitter because I knew that I called a buy somewhere around here that we should buy this trade because it has broken my resistance and it started going up. Now, there was no stop loss here. If price keeps going up and up, this figure here will be increasing. This minus 3,921, if you keep increasing till it gets to 10,000, till it blows out this $53,000 here. That is why you need to put a stop loss. If there was a stop loss here, the height I can lose maybe here will be about $1,000 or $900. But because there's no stop loss, price keep going what? Up and up and up. See the beauty of stop loss. Now, I was explaining, what was I explaining? The fundamentals, good. Now, this is gold versus US dollars. Let's say this was 9/11 and that explosion happened. Every investor will start buying gold. And when you're buying gold, you're expecting gold to what? Increase, just like what you're seeing here. The price, the more these candles are going up, that is showing you the value. It's just like someone in the hospital and they're checking the heartbeat. Or maybe a patient had an accident and they place those machines on him and you can read the heartbeat. You know, you can't see what's happening except with those machines from the graph that you're seeing on the machines, on the monitor, how the heart rate of the person is going up and down, up and down. By the time it shows a red a line, it shows that the person has gone. So that's the same thing with Forex. This candlesticks is just to help you understand the movement of the market, the value of the market. If you see a drop, it's telling you that the value of gold is what? Is dropping. You know, I told you gold is XAU USD. The base currency is higher than what? The quote currency. Now, gold is the base currency. If you look at the symbols here, you can see XAU USD. Gold is on the base and USD is on what? The quote. Telling me that gold is what? Higher than what? USD. The value of gold is higher than USD based on this symbol. So what I'm expecting gold to do is increase in value. So that time that there was a hit for the fundamental analysis, that when that bomb happened in 9/11, any trader that places a sell expecting a drop on, expecting the value of gold to drop, that person is making a serious mistake, because investors will leave their money, withdraw their money from dollars and start buying more gold to secure their money. So what you'll be expecting is that gold will keep increasing by the day. Now, let me show you this. Sorry, I just had to digress so you understand what I mean. You can see the value of gold since 2019. It has been increasing up to where it is now. That is what is telling you that gold is having more value. It keeps increasing. Look at where market stopped at this time. Another account I will show you. Okay, this is another account where I'm buying gold. See my take profit. I've secured my profit. So if market opens, I'm making more money. This is $5. This is $5 here. This is the account I posted on Twitter when I called the buy. You can see that it's going up and up. That is just the illustration of what the candlesticks help you to understand the value of each currency. That is what a candlestick is. So then let that candlestick that's the first thing I saw when I wanted to learn how to trade in foreign market, and I told the person I'm not interested. But very soon it became so easy for me. Those candles you are seeing there, those black, you can use any color. It shows you what the value of each pair of each currency is. Either when it's going up, one is strong, when it's coming down, one is weak, and one is strong. That's just what it means. So technical analysis, if you see the other thing I showed you, okay, let me bring up this chart. Now, technical analysis, you can see this on my screen, this geometry on my screen. In the past, about 200 years ago, people saw that there's a pattern that always happens in the market. And they started using mathematics to draw the patterns and all that for them to know the future of the market. Just like you going to a soothsayer and telling the soothsayer to tell me what my future is going to be. And the soothsayer will look at your palm and say, oh, you're going to be a great person. You're going to be a great Forex trader. You buy this and buy that. That's what technical analysis helps. The work of technical analysis, it tells you what the future of the Forex market is going to be. Anything that happened in the past always happen in the future. Just like they tell you that nothing is new under the earth. So it's the same thing with the Forex market. Anywhere price has gone before, price will always come back there to test it before going anywhere. So that's just what technical analysis means. It's simple. Then sentimentals are based on your assumptions, your human mind. Like cryptocurrency, people are saying cryptocurrency has gone up. It's going to go to $25,000 very soon. Let me just buy and keep it. Then until it grows to that place, I'll get my value. That's just sentimental. But the two major things that moves the market is technical analysis and fundamental. That's why it's always good for you to do what? Before you open any trade, first thing you should do, go to Forex Factory and check the news. Let me click on Forex Factory. Forex Factory tells you what? The analysis. Let me click on Forex Factory. Forex Factory, good. This is Forex Factory. You come to calendar. It shows you, you can see all the things here, NZD, China, Australian dollars. The red envelope tells you that there's a major news. Let me attend one that wants to open the door. 1 minute. Just give me a minute. Okay, I'm back. Sorry about that. So the red envelope tells you that there's a major news that's going to come. So if you want to trade that day, you need to be careful about the US dollars, what's going to happen. Okay, you need to be very careful. This is where you can, every trader, new trade beginners, always come here and check red envelopes. So you can avoid that trade or trade with caution. This is just the sentimental, this is, sorry, the fundamental part of Forex trading, okay? Forex Factory, you can type it, forexfactory.com. So now that is what fundamental is, and this is what technical analysis is, and that's what sentimental analysis is. Now let me explain it there. These are the ways you can analyze and develop ideas to trade the market. There are three basic types of Forex market analysis: the technical analysis, the fundamental analysis, and the sentimental analysis. There has always been a constant debate as to which is better, but to tell you the truth, you need to know all three. I was watching Blue Bank the other day, and one of the Forex analysts said he doesn't believe in technical analysis. Only what moves the market is what? Fundamentals. There are some people that don't believe in technical analysis. They just wait for fundamentals and they make their money. Fine, good. But I will advise you to learn everything. So when you meet it, it won't sound new to you. Okay? That person has over 25 years experience in the Forex market. He has higher experience than myself. So something must have made him to believe that fundamentals are actually better than what? Technical analysis. It's like standing on a three-legged stool. If one of the legs is weak, the stool will what? Break under your weight. And if you fall, the same holds true in trading. If your analysis on any of the three types of trading is weak and you ignore it, there's a good chance that it will cause you to lose out on your trades. Okay? So I want you to understand that it's always good to have everything in place. Everything in place. But me, I actually do what? More of technical analysis. I only add fundamentals to be when I go to Forex Factory or I'm following Donald Trump. I don't follow him because I'm in love with him. I'm following him because any tweet he says can move the market. Anything that happens can move the market. So those are the things that you need to understand. Like I told you, if you go to Forex Factory, you'll see different economy. Like sometimes when the prime minister of Britain wants to say something, you need to be very careful. Is the thing that he's going to say going to be affecting the economy, or is it not going to affect the economy? Those are the things. If you are trading Forex, you have to what? Your mind have to be built with what is happening everywhere in the world. You can't be trading Forex and say you want to be watching entertainment 24/7. No. You need to understand, have a general knowledge, what is happening in America, what is happening in Japan, what is happening in this. With all those knowledge, you understand when you want to take your trade. All those things helps you in taking trades in the market. That's the beauty of what? Forex trading. It helps you to be very sound. It helps your mind to be sound. You get acquainted to everything happening around you and in the world. Now look at this. These are technical. This is very brief. I'm just giving you a brief part of what? The technical analysis. Now look very well on the screen. You can see this head and shoulder. This is the head here. This is shoulder here, and this is another shoulder here. I'm going to go on a live chat and I will show you anyone I see on the live chat. I'm going to show you on the live chat. My chat is blinking. Please let me. Okay. Now you can see the symmetric triangle. Look at it here. You can see the symmetric triangle. This one you're seeing here. So for technical analysis, I won't advise you to do what? Buy or sell when price is in the triangle. As I told you, if you want to trade in the Forex market, you have to be patient. Somebody will tell me, from here to here, I've already made money. No, wait for a breakout of the triangle. Let price breaks out from the triangle, and better still, retest the triangle without coming back inside the triangle. Then you can buy in peace. Put your stop loss below and enjoy the trade. But when you are in the triangle like this is when you'll be looking at your phone till SARS will even arrest you. Sorry about that. I just a funny one. Okay, they'll say, what are you looking at in your phone? But if you place this, enter your trade, as soon as it has broken out of the triangle, retested, and you buy in peace, you know that yes, I am doing what? Buying this thing with with peace of mind. Then you place your stop loss and you go your way. If you see any of these patterns like this, you see all these are patterns. If you spot all these patterns in the market, you wait for what? A breakout, retest, and you buy. You can see you can see the entry point here. You see this flag? It's just like a Nigerian flag, the stick and the flag. You wait for it to break out of the what? Of the flag before you enter your trade. The same thing with the symmetric triangle, ascending triangle, all these things, pattern you're seeing here, you will see it on a live chart. Just like this is a live chart that was screenshot. You can see that it's showing you this symmetric one when it broke out, and for buy and for sell. That's the technical part of what? Trading in the Forex market. This is actually very sweet, especially when you understand how to spot these patterns in the market. This type of analysis is used by traders to study price movement. They use historical price movements to determine where price could go. Remember, I told you anywhere price has gone before in the past, price will come back and retest that place. Have you heard of the old adage, history tends to repeat itself? Well, that's basically what technical analysis is all about. If a price level held as a key support or resistance in the past, traders will keep an eye out for it and base their trade around the historical price level. Technical analysts look for similar patterns that have formed in the past and will form trade ideas, believing that price will act the same way that it did before. Now, let me give you an example. You are sitting down in your house now. If you look up, you see your ceiling. If you look down, you'll see what? The floor. In the Forex market, the ceiling is the resistance. The floor is the support. Because of law of gravity, that's why you can do what? Actually sit or stand. But if there's no law of gravity, you'll be floating and your head will be doing what? Touching your ceiling. So that's the same thing with price. If price keep hitting this, if you take your hammer now and you keep hitting on that your ceiling, you keep hitting on it, eventually, even if it takes you 1 week, 1 month, you eventually break it and you can see your neighbor upstairs, or you can break it to your roof. That's the same thing with the support. If you take a sledgehammer and you keep hitting on the floor, you will hit it or you make a hole, you burrow a hole on the floor and you can see the foundation of that floor. That is what I'm expecting you to do when you see price trying to break through a resistance. You'll be patient until price break through and retest it, then you can do what? Buy it. The resistance here is the first blue line above here for this person to buy. Price has been hitting here, it didn't break it. Hit here, it didn't break it. Hit here, the price did not break it. It continued hitting until it broke through. It broke out from the ceiling, retested the ceiling, it did not come back inside, and the trader placed his buy entry, and it was good. So it's the same thing if you want to sell. Price came, hit the floor, keep hitting the support, it did not break it until it broke it. Now let me go back to the slide, to my live chart. Let me go back to the live chart. Now, these blue lines here are my support and resistance line. Let me start from down here. Price was hitting you can see what price was doing here. It kept hitting my resistance line, hitting it. Even when it broke out here, it closed in between. It did not break out. But price did what? Finally broke out here. Came back to retest it. And if I click a buy here, I'm buying in piece up to the next resistance, the next blue line. If I decide to take my profits here, I've made money. If I decide to take my profits here, I've made money. Now, this is another support line. Let me click and draw it so you can see that if price by tomorrow, 11 p.m., if market open and price wants to be going up and gets to this place, if I put my take profit here, imagine I took a buy on this. As soon as price gets to $1,947, it will take me out and I will make money. All these blue line are what? Resistance line and support line, and my floor and my ceiling that I put because of the technical analysis I use. I'm just using this to explain to you what this means. Okay, that's the technical analysis part of it. It's very beautiful if you understand how it works. In the world of currency trading, when someone says technical analysis, the first thing that comes in mind is a chart, just like what I showed you. Technical analysts use charts because they are the easiest way to visualize historic data. You can look at the past data to help you spot trends and patterns, which could help you find some great trading opportunities. The important thing is that you understand the concept under technical analysis so you won't get nosebleed whenever somebody starts talking about Fibonacci, Bollinger Band, or pivot point. As the time goes on, you understand what Fibonacci is, what Bollinger Band is, what or pivot point is. These are all technical terminologies that we're using, and they're all indicators that help us to understand the technical analysis in the markets. So technical analysts look for similar patterns that have formed in the past and will form trade ideas, believing that price will act the same way they did before. That's what technical analysis is. Now, breaking news. This is fundamental, like I said earlier. growth of an industry, economy analysis, industry analysis, company analysis, GBD, inflation, government policy, economic policy, and all that. For instance, if Naira was in the trading platform and you are trading USD against NGN, and this SARS protest happened today, I'm asking the question. I want you to tell me what you're going to do. I'll give you an example, then I want you to answer it. USD against NGN. Like I told you earlier, USD is what? Higher than anything that is on the base is higher than what is on the what? The quote currency. Teddy Bowe, please. Femi, can you remove him? He's trying to write on my screen. Please, please. Now, if you are buying a base currency, if you click, two things you do in the currency market, you buy or you sell. USD against NGN. If you click on buy, it's telling you're telling me that dollars is stronger than what? Naira. So I want to buy more dollars as against Naira. But if I click on sell, it's telling me that I'm selling the dollars because I want to buy more Naira. Okay? Now remember I told you, can somebody stop writing on my wall, please? Femi, are you still on this call? Can you help me control this? I beg you. Oh. Femi, are you on this call? Please, can you help me clean that?
Yes. You give me control of the screen again.
Can you clean it and delete the person? Remove the person from the call. Thank you.
Okay.
So, if
Just give me a
you
minute.
have, okay. So, thank you for that. I'm sorry about that, please. So, for instance, USD NGN. Like I told you earlier, if you are buying, it tells me that dollar is strong, and if you're what? Selling, it tells me that Naira is strong. You want to sell dollar. Remember what I told you about 9/11? Gold against dollars, and there was a bomb blast. What will people do? They will click on buy and start buying more gold as against dollars because the value of dollars has reduced. So now, this is USD against NGN. And today there was a protest and somebody died. What will happen in the forex market if you want to place your trade? Are you going to sell dollars or buy dollars? What are you expecting? Will dollars value increase or the value of Naira will increase? Please tell me by typing your answer on the chat box. What are you going to do as a forex trader? Will you buy more dollars or will you buy more Naira? Okay, you buy more dollars. Great. This is a very interactive class. It tells me that you are actually paying attention. That's beautiful. Sell Naira, buy dollars. Good. So what you're going to do is USD, NZD, NGN. You click on what? Buy. Let me type it so people understand. USD, NGN. You click on buy order. Beautiful. Anybody that wrote buy order, you actually got it. This is a very intelligent class. I'm seeing future traders here, people who are going to use forex trading to buy their own economy, build your own house, live the kind of life you want to live. $6.6 trillion in a day. If you decide to take $100 every day from the market, you know how much you're going to make? 100 times 20 trading days. If you decide to take $1,000 every day, depend on your trading capital. Trust me, take your time to learn this skill. You are going to enjoy it at the end of it. It's just like you are trying to cut a tree with a blunt knife. And we have 6 hours to cut the tree. And you want to be fast and you're using the blunt knife to cut the tree. I'm going to take 5 hours to sharpen my knife very well. And it will take me 30 minutes to cut my tree. So if it's going to take you 6 months, 1 year to understand the forex market, Femi, please, can you clean this thing on my screen, please?
I'm working on it.
Thank you. It's going to take you 6 months, 1 year to do what? Learn the skill of forex trading. It will take you 1 month to make all the money that you've been dreaming, the life that you want to live, the travel, everything that you want to do. You can take it away from this market. Trust me when I say that. So don't be in a hurry to make money. Rather, get the skill first. Understand the movement of this market. It will be easy. Like I told you, for you to be part of this, You're not part of my life. I'm part of your life. I'm not just going to give you a 3 days training and let you go. No, we're going to study this market together. Everything, we'll do it together. You go back home, do your study, send me your report. When markets open, this is what I'm seeing, this is what I understand about the market and all those things. Now, this is what breaking news that moves the market. Economic policy, RIB policy, financial analysis, all these things that happens. If there's a new policy in America that's going to help America economy to grow, what will happen to gold? AXUUSD. Let me type it in the chat box. Am I going to buy gold or am I going to sell gold? AXUUSD. If Donald Trump says, oh, there's a new policy and it's going to boost what? The economy of America, what am I going to do on my MT4? Sell gold, buy more dollars. Beautiful. Are they hear me? Oh, I shouldn't have said beautiful. Some people will start saying it. Okay, yes, good. Sell gold. Now, this is a very beautiful and interactive class. This is beautiful. Yes. So my MT4, let me go back to my MT4 so I will show you. Now, this is a buy order and this is a sell order. So let's assume Donald Trump says something this weekend that, oh, this is the new policy I'm bringing, blah, blah, blah. The economy is going to be good from this percent to that percent. All I'm going to do is by Monday, I go to Forex Factory, look at my Forex Factory. Okay, this one the news is going to come. And I know that it's going to happen. I will just come and click what sell. You can let me click it. You hear the sound. Okay, do you hear the sound? It shows that market has closed. I can't even place any order. But as soon as I click the sound sell, boom, the market will start dropping instantly. Instantly, because gold is having the value of gold is reducing and the value of what US dollar is increasing. So that's the beauty of what breaking news is all about. There are some people that know how to trade the breaking news. All what they do is to go to Forex Factory, wait for red envelope, and go to their chart and look for what to do. But if you don't know how to do it, brothers and sisters, wash your hand from it. It can marry you and can do what? Make you rich. Now, fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that may affect the supply and demand of an asset. Using supply and demand as an indicator of where price could be headed is easy. The hard part is analyzing all the factors that affect supply and demand. You have to understand the reason of why and how certain events like an increase in the unemployment rate affects a country's economy and monetary policy, which ultimately affects the level of demand for the currency. Like if Donald Trump decides to increase the inflation rate or do anything in the market, it can affect what? Just one government, but it's just because Naira is not on the trading platform. So many things happening in this country. If we're as a forex trader, you make a whole lot of money from it. But the Boko Haram stuff, you just go and click on buy. Everything that's happening here, you just be clicking on buy because we buy more of the other currency as against what? Naira, and be making money in the forex market. The idea behind the type of analysis is that if a country's current or future economic outlook is good, their currency should strengthen. You understand? The better shape of country's economy is, the more foreign businesses and investors will invest in that country, the result in the need to purchase the country's currency to obtain those assets. So you see the good reason why countries are actually looking for people to come and invest and do more business in their own country. So by the time you have more industries, you have things that make people to come to your country to keep flocking in money there and doing that. Why is Dubai rich? Just tourism. They did something fantastic with their country and people are trooping in there every day, going there for tourist attraction, going there to spend holiday, going there to buy things and all that. The more you're exchanging money and all that, those people are getting future rich. But what is attracting people here in this part of the world? Rather, the own citizens are actually leaving. So these are the kind of things you should always look at when you are trading news. What is happening in this country? What is happening in the other country that I'm trading and all that? Like me, I love trading gold. Gold is a safe haven. If the whole country's economy is going down, the only thing investors look at is, let me place my money on what? Gold, and save it there. That's why I love trading gold. I love trading few pairs It's not good to trade all the pair. Yeah, when I was starting, I traded everything. I want to know everything. But now, by the time you keep growing and getting advanced in the trading platform, you just pick 2 or 3 pairs, look the analysis and take it. It's not a do or die stuff that you want to every day your eyes into the market. No. You place your trade with peace and you just go and you rest. So this is what breaking news can actually. Why is Naira not the trading for your country is okay? Election is coming. Yes. What election is coming? That is why if you see the gold is actually going up because people are not sure what's going to happen, whether Donald Trump is going to win or his opponent. So what investors are actually doing, they're just buying gold to keep. Let me just be on the safe side. If you don't have the idea of what's going to happen, don't trade any pair that have, even if anything that's happening affects every other pair. But I love gold because now that there's an election coming, what's going to happen? Investors never lose. A wealthy man don't lose his money. What he will do is just to move his money from one place to another. So people are moving to gold. Some people are buying cryptocurrency for those who know how to trade crypto, just to save their money there and save haven. But most likely it's gold because the whole world they are not yet used to crypto. But the gold is something that everybody knows. Every bank in this world, they have a gold store in their account, in their bank. Always have that in mind because gold never loses its value. The way it is, that's the way it is. Okay, so let's go on. To study fundamentals, check out Bluebank TV. Like I told you, if you want to be a Forex trader, you have to reduce more of your entertainment and increase more of your education about what's happening around your environment, what's happening in the world, what's happening in this economy, what's happening in that. Okay, even if you're on social media, you're following people that you know that, yes, one tweet can change the Forex market. So that's what you should do. Not focus your mind, you're watching TV, you're watching entertainment, you're laughing, you're telling you to trade. No, anything can happen. So you need to get acquainted to Bluebank TV, get acquainted to bluebank.com, Forex Factory, and various economic calendars that tells you what happened in different countries at a particular time. Now, this sentimental analysis is just based on your own emotions. Since price has actually been going up, the emotionally come down. Let me go back to that gold. Sorry. Now let me tell you what's up, people. Let me show you what sentimental is. See, look here. Let me pick a trade line. Traders will say, since this price has been going like this, up, 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 when is it going to come down? Let me stop here. You like this is just like, trading is like breathing in. Breathe in and breathe out. You can't continue holding your breath. Oh, there's a limit you can hold your breath, you will release it. There's a limit that the market can keep going. It must surely have a break. So for instance, your trading is just your own emotion. Like sentimental is like, this thing has gone so high. You saw this kind of thing going this way like this. You're expecting price to drop. Let me just sell this market. Not based on any fundamental or all this. It's just based on you that this was going to happen. And the market does what? Now drop. It's based on your emotion. It has no analysis, just your own emotion, positive or neutral or negative. That's just what sentimental analysis is. Based on traders' emotion, a lot of people feel that price action should theoretically affect all available market information. Unfortunately for us Forex traders, it isn't that simple. The Forex market do not simply reflect all of the information out there because traders will all just act the way of course. That isn't how things work. This is why sentimental analysis is important. Each trader has his or her own opinion of why the market is acting the way it does and whether to trade in the same direction of the market or against it. Each trader's thoughts and opinion, which are expressed through whatever position they take, helps form the overall sentiment of the market, regardless of what information is out there. The problem is that the retail traders, no matter how strongly you feel about a certain trade, you can't move the Forex market in your favor. Nobody. Yesterday, we told you the people that move the Forex market, right? If you still remember those that move the Forex market, type it on the chat box. Let me know that you're following yesterday. Who are the movers, who are the movers that move the Forex market? I want you to type it on the on the chat box so I can know that you actually took down things. Central banks, correct. Investors, you're correct. Big investors, who else? Just two people. Institutional investors, corporation, okay. Commercial banks, okay. Good. No, retail traders don't move the market. Oh. Retail traders, we don't have money. Don't worry. Retail traders don't move the market. Okay, yeah, good. It's only the only people that move the market are hedge funds, people who have hedge funds, big investors. Not me and you with our $500, $1,000, $10,000. The market don't even know what they. What we are doing, we're just following the footstep of our mentors, of the big boys. If the market say go left, we go left. If the market say go right, what we are doing, all of us put together. Tomorrow, if you start trading, what you are doing is just follow this footstep, follow the yellow brick road. If the market maker say go right, please go right. If the market maker say go right and you go left, you will lose all your money. What we are doing, we are following where the market is going. Okay, we're not doing our own this thing. Now, this is assignment 2. This comes to the end of today's class. Today's class is not as lengthy as the other one, but we went more technical to show you how the market works. That's why I had to show you live accounts. So I want to take a screenshot of this because you're going to submit your assignment like we did before. Hedge funds, good. Somebody wrote hedge funds, beautiful. Yes, government. Okay, good. Now this is assignment 2. 7 assignments. I want you to do the same thing that you did yesterday. Answer your questions. Tag myself, Golden Blaze, and then Jazzy on it, and let me see your answer. Some people have my number already. Those are the people that submitted the assignment. If you've not gotten my number and I've not added you to my brokers list, because I created a list for everybody that had my number. I sent you my number on Twitter. If you've done your assignment, the one assignment of yesterday, go to my Twitter page and tell me that you actually did it. Show me your assignment and I'll give you my number. I'll add it to my brokers list. So how many type of currency pairs do we have? Now let me give you an expo. This is very simple. Go to your MT4, download MetaTrader 4 on your platform, and there you can see how many currency pairs we have. Okay. So I'm giving you an expo, right? Name 5 major pairs. Remember what I told you the major pairs are, the minor pair and the exotic pairs. Remember that major pairs are the pairs that have what? USD. I'm not supposed to tell you, but I'm just telling you. Define the following balance. I think you did this yesterday, so you can leave it. Write down 10 currency pair and identify the base and the quote currency. Calculate 150 pips TP and 28 pips stop loss for a buy order on Euro USD. Entry price 108.725. The same number 5 had will be calculate 145 pips TP and 58 pips stop loss for a sell order on Euro USD if your entry price is 1.14086. Remember what we told you yesterday. For Euro USD, your pips is a 4th digit number after the decimal point. This is the decimal point. You start counting your pips from here, the 4th digit number. The 5th one is what? The pip. The same thing with what? The JPY pairs. Your pip can start counting from where? I'm not going to tell you that. I already told you about this, so you have to figure this one out yourself, where the pips start counting. Now, list the type of orders available on your trading window. You know the type of order that I told you earlier, you have to list it. What are the type of Forex market analysis? We just finished that one now, the Forex market analysis. So do your assignment, take a screenshot, do your assignment, because the more you do this, you get acquainted to what? How Forex works. Like I told you yesterday, you are not going to get everything today or yesterday. As time goes on, the more you keep practicing, the more you keep practicing. And like I told you, everybody's going to be in a group. Everyone that has done the assignment, I'm still going to create a group where we're going to be analyzing pairs. We're going to be taking it one step on the other. If you've not moved from beginner's class, you cannot enter the next group, which is intermediate class. So it's one step. This is just for beginners. So you need to understand this very well before you can graduate to the other step. You can't jump one and go to 5. You need to take one step at a time. If there's any question, please type it on the chat box. More this calculation go hard. I can't see the assignment. Okay, if your Twitter was blocked, you can send it to the person that gave you this link. You can send the question to the person. If you saw it on Facebook or Instagram or anywhere, you can do it. It's not hard, Francis, trust me. Go back to your notes. I love the class already. Thank you. Please, I wasn't in the class yesterday, so the question 5A and B, they beat me already. Go to, you have Google. That's why you have Google. Okay? I always say, when people say, I don't know, you don't use your word, I don't know, because you know everything. Okay? It's just that you don't have information. Go and research for the answer. Even if it's wrong, don't worry, I'm going to correct you. But try your best to answer it. And don't tell yourself that I don't know it. My brain is not special than your brain. The only difference is because I have more knowledge in the forex market. That's why I understand it. By the time you have knowledge like this, you can even either be better than me if I don't do what, upgrade myself. So everybody in here is special. Everybody in here can do this because I believe in you. For you to click on this link today, you actually want to know this. Okay? So please, please, please do your assignment. I'm going to post it on Twitter. Okay? I'll post this assignment on Twitter. I'll post it on Twitter. So for those who say they can't see it, we actually see it. You never mentioned binary trading. Binary trading is volatility. That's what I'm not doing. This is Forex. What we're teaching here is just Forex trading, not binary. Okay. From Tanzania. Thank you very much, Jambo. So I want you to go on Twitter, show some love. Thank Don Jazzy for making it possible for this. How can I do my assignment of yesterday and get your number since I missed? Do your assignment for today, Basti. Do your assignment for today, okay? Do today's own. You get my number. Do today's own and post it. Go and show some love. Tag him. Because without him, I wouldn't have been doing this. People pay a huge amount of money to get this, but I'm doing it free. I don't know where to post it. Gerald, how did you get a link? Whatever how you got the link, just post, give the person the assignment. The person will get to me, okay? From Twitter, yeah, just tag me. Okay, let me show you. Let me send my Twitter handle. Go show some love. Yes, that's my Twitter handle. This is Don Jazzy's Twitter handle, and Golden Blaze Twitter handle as well. Okay, thank you. Do that. Yes, start contact page. Beautiful. Go tag them, show some love, because this is not just going to end. It's not ending here. I'm going to be part of your life for this trading. I want everybody to be a successful trader. I want you to post on the chat, oh, see how much I made today. This is what I did today. This is what I did to, just like that. Even if you're going to start from $1. When I started, if I make 20 cents, I'm so happy. You'll see me rejoicing. You see me dancing. But today, I can see that I comfortably make $200, $1,000, $500, any amount I can make because of what I've gotten the knowledge. I'm okay with $2. Don't worry. By the time you know better, $2 will be very small for you. You're going to be getting $200 on a daily basis. It's just for you to increase your capital or work with the capital you have. And tomorrow, the people that are going to join will have a trading journal. I'm going to give everyone a trading journal. I will create a group where everybody who did the assignments is going to be. The trading journal will help you mitigate too many of all these excessive losses you are making in the market. If you tell you the stop loss you're going to use, you will put the amount of equity you have. If you have $1,000, if you click on it, everything is automated. It will show you the kind of lot size you're supposed to use. It will show you the stop loss you're supposed to use for each trade and the number of pips that you're supposed to catch. Everything is on that trading journal. These are for those who will do the assignments, okay? You already commented on my assignment. I already entered your DM. Also, you haven't replied me. Really, please do that again. I'm sorry about that, okay? I'm sorry about that. Send me a DM again on my WhatsApp. You already have my comment. Okay, let me send you a private my number here. I've sent you my number privately, iPhone. So you can send me a WhatsApp message, okay? All right, thank you for and thank you for wanting to increase your skill and your knowledge. Thank you, Jambo. God bless you. I love you all. And please go back to your notes, do your assignment. If you have any question, feel free to end this class today. Femi, please do justice
I'm with
and
you.
end the
All
call.
right.
Yeah, you can end the
Thank,
call now.
okay. Thank you very much for the call, madam.
You're welcome. Can we get the recorded version? Yes, you're going to get it. We'll get it.